There's a 35% dip in net profit of State Bank of India. To discuss this and why it has been so, I have with me Mr. Dinesh Khara, who is chairman of State Bank of India. My first question is, there is a special provisioning this time of more than 7,000 crore. Explain to our viewers why there is a dip in net profit, and had this provisioning not been there, what would have been net profit for the bank?
See, we have booked about 9,100 crore profit in this quarter, and if we look at it YOY basis, the profit is up by about 20% on a 9-month basis. But yes, of course, we are required to provide for this one-time pension provision, which is actually an outcome. This matter was pending before the court of law for almost about 20 years plus, and there is some resolution which is in sight. And in terms of the resolution, there was an anomaly in terms of the pension which was being paid to the employees and the officers of the bank. Some set of people were being paid pension at the rate of 40%, the other were being paid pension at the rate of 50%. So this anomaly stands addressed, and this 5,400 crore is the pension provision which we are required to make and credit to the pension fund so that these liabilities which will accrue in future can be met. That is one aspect. The other aspect is 1,700 crore, which is on account of the dearness relief which was being paid to the pensioners. There used to be a slab system earlier for the retirees who retired before 2002. And for that also, this was a decision which was taken to address that anomaly as well. And 1,700 crore provision was mandated by our actuary for meeting such liabilities in future. So this itself is about 7,100 crore. All this 5,400 plus 1,700 makes it 7,100 crore. And in addition, actually, we have made some provision on account of the pension provisions. Earlier, we were providing at the rate of 10% from July 22 onwards, November 22 onwards. Subsequently, we increased it to 14%. Now there was an MOU which was entered into at the behest of IBA for increase in the salary to the extent of 17%. So we have actually taken care of all the outstanding liabilities, and even that has also been provided. And this quarter itself, we have already provided about 8,000 crore. But this quarter, we have provided about 6,000 more crore on account of this differential between 10 and 17 and 14 and 17. So actually speaking, if we look at these numbers, profit numbers, they are net of whatever are the likely obligations on the part of bank on account of the salary increase, on account of increase in pension. So all this will be behind us.
Talking about next quarter, how much of the provisioning is remaining, especially considering 17% wage hike, because last time the assumption was 14%?
Yeah. Only 5,400 crore worth of additional provision would be required. So if you really look at it, 7,100 plus almost about 6,000 odd crore, about as against 13,000 additional provision which we have done in this quarter, will be required to provide only 5,400 crore in the next quarter.
You've mentioned about the economy which has been performing well as far as domestic factors are concerned. Now there is an upgrade if you talk about last quarter to this quarter. We can also expect similarly State Bank of India also upping its credit growth target because you have been maintaining that it is interlinked?
Yeah, I do agree, but if at all you really look at it, the GDP growth is expected to be around 7.3. So what we normally look at it is the nominal growth would be 7.3 plus another 5% on account of inflation, so about 12.3. And we are generally believing that we as a bank should normally grow at about 2% or 3% more than what the nominal growth is. So I think on that particular count, my expectation of 14 to 16% kind of a growth, I still maintain, and hopefully we should be in a position to maintain that for the year as a whole.
But next quarter you expect to be better than this one?
I expect that there is a positive traction, so hopefully that should show up in the books also.
Talking on the margins front, there has been consistent decline in margins quarter and quarter. What has been reason according to you, and what can we expect in coming quarters?
Essentially, this was on account of the increase in the deposit rates, and we had attempted, though there could not be forecasted, but nevertheless I expect somewhere similar NIMs.
Talking about corporate credit, which has grown around 10% this quarter, do you think this momentum will continue? How much is the pipeline?
We are having a pipeline of almost about 4.6 trillion, and I would say that the kind of utilizations which we have seen in the working capital and the reduction in the underutilization which we have seen in the term loan, I expect that we should continue to see this kind of a growth going forward also.
There is a slight blip if you talk about fresh slippages this quarter. Last time it was around 3,800 crore and this time it is 4,900 crore. How much do you see for the whole year? Because last year it was around 18,000 crore. Do you think this year will be better off compared to last year?
I expect it to be better, and out of this 4,900 crore also we have already pulled back 900 crores. So we are almost in the similar range. And invariably we have seen that in the November-December month, we have a situation where the agricultural loan comes up for the renewal, and because it's all concentrated in 2 months' time, there's a situation where some of the loan gets renewed later, and we'll have a similar situation. And I hope that in the agriculture we will get to see a much better performance. And of course, one account is there in the SME space, where we will have to take a call, because it is essentially on account of the weakness in the balance sheet, not on account of the repayment records. So we will have to take a call on that account, and we will be addressing those issues as well. So I hope that going forward we should be much better placed.
Talking about capital ratios, if you talk about standard of SBI only, it is coming down. In future, what are your growth, capital raising plans? Do you think this will be sufficient for growth? I
think in the capital also there are some one-offs which have happened in this quarter, essentially on account of the increase in the risk weights by RBI for the unsecured as well as for the NBFC space. So overall, the impact was about 70 basis point for the capital adequacy ratio and 49 basis point for the CET1. So what I expect is that of course, such kind of impacts will not be there going forward. But if at all we reckon our profit which we have generated all this while, I would say that the capital adequacy ratio CAR will be somewhere around 14.32% as against where we stand today, and even the CET1 also would be somewhere around 10 point. I would like to highlight, we are seeing our ROE growth is almost about 19-20%, whereas our credit is growing at about 14-15%. So incremental improvement in ROE actually gives us a better elbow room for the plowback of the profit. So that's how it really works, and hopefully we should be in a position to plow back decent amount of profit at the end of the financial year, and we should be adequately equipped to ensure that the balance sheet growth which will be coming going forward, we should be in a position to support it well. However, I am quite open, if at all the growth will be faster than what the ROE growth is, then we are quite open to look at the options for raising capital and also even AT1. So we are quite open to explore all possible options if need be.
My last question will be on credit cost. What is your outlook for the next quarter and the whole year?
Our credit cost has come to 0.25%. So I think we are very well placed as far as the credit cost is concerned. Our effort and endeavor is to keep it almost around the same levels.
Thank you so much for talking to ET Now.
Thank you. Thanks a lot.